weekend with us. We've got a great presentation for you once again today. Hopefully, everybody is staying safe and healthy wherever they are in this world at this point, in the VectorVest world. All right, just kind of take a look at the chat here. Let us know where you're tuning in from so we can see how far we're reaching here. Looks like sound is good, so thanks a lot for that, folks. Hey, there's some familiar names already. Good to see Tim. There's Bob in New Brunswick. Hey, Jack, thanks for letting us know you can hear. Good morning, Wayne. So we've got, let's see, we got some folks from Germany. We've got Raymar from Germany. We've got Gary in Arizona. There's Wayne in Nanaimo, BC. Hey, Fayez in Montreal. Karen in Vulcan, Alberta. Hey, there's Mark from the Ottawa area. So I'm in the Ottawa area as well. So Mark is enjoying the heat, the humidity, and the sun for now, I guess. I think we have some storms on tap later today and possibly tomorrow. Hey, there's John in Montreal. So yeah, we've got North Dakota. Looks like Badger and Mike in Edmonton. So Medicine Hat, there was James in Oregon. We've got Michael in California. So you can see so far we're over into the European Union, Canada, the US, well represented. Hey, there's Marguerite in the Toronto area as well. Mississauga, I think, right, Marguerite? All right, so we got a lot of stuff to go over today for you folks. Once again, thanks for sharing part of your weekend with us. It is a long weekend here in Canada, so even more kudos go out to those folks tuning in. Again, a lot of familiar names in there. Great to see. We've got Tom. Yeah, he's saying Muggy Burlington there as well. All right. I think audio is pretty good for most people, Thomas. So, well, it's not going to help if I tell you. I think somebody will help you out in the chat if you are having audio issues. One of the things too, folks, that usually comes up is video quality. So make sure if you're not getting, if it's kind of fuzzy, there is a gear icon. If you hover your mouse over the YouTube screen, there's a gear icon you can click on, and make sure you pick high definition video, and that'll fix that for you. All right. So with all that said, let's get started here. So this is on the VectorVest YouTube channel. All right, so make sure your computer speakers are turned on and to hear the audio portions of the webinar. And there will be, because this is on YouTube, the replay will be available shortly after we're finished on the VectorVest YouTube channel. All right. Here's our risk disclaimer, folks. As everybody knows, there is risk in investing. So everything you will see and hear today is provided for educational purposes only and should never be considered as investment advice. The information is designed to empower you to make your own investment decisions, and these decisions are yours and yours alone to make. All right, so now that we have that out of the way, we can get into the agenda. So hopefully everybody's feeling welcomed in the room, and you see we will be doing a global market review now. Usually in the write-up, we have urgent global market review, and I think somebody did put the urgent into the global market review for this session. And it might be the next guy that I'm introducing. He might have put the urgent in it. There could be an argument, whether it's him, maybe Fed Powell, who knows. But I am very pleased to be joined by Mr. Todd Shaffer, and I'm sure he's no stranger to anybody in the VectorVest world. Of course, part of the dynamic duo for the Successful Investor course, among many other things. And he'll be doing the keynote presentation today, folks, and he'll be covering the VectorVest Portfolio Cleanup Setup Challenge. All right. So how are you doing today, Todd?
I'm doing great. We're going to focus on when to sell. And that's a big issue for everybody. Keeping with that presentation Jim Penna did last week about protecting profits, I thought a very timely presentation that we can do today. And by the way, I was nowhere near the urgent button.
All right. All right. Yeah, maybe it was the Fed, who knows, right? Um, all right. So after that, we'll be adjourning around 12:30, folks. And as I mentioned earlier, you can see there the replay with this recording being on YouTube. It'll be available immediately after the webinar. All right. So with all that said, let's carry on, and we will start with the global market review. Oh, and I should mention too, folks, so we do have Clay in the breach today. Joey isn't with us. He's getting some uh, much earned time off. So we've got Clay in the breach. So everybody say hi to Clay in the chat. And Clay will be going to full screen for the presentation now. All right, so let's take a look at the color guards, folks. We'll start with Canada here. So here's the Canadian color guard. Year to date, the Canadian market, the Canadian VectorVest composite is up 8.35%. But you can see in the last while, we have had quite a bit of red coming into the color guard. I've got Todd with us. So Todd likes to call this the Christmas tree color guard when we have all three colors represented. But you can definitely see how we started to get a lot of red creeping in there. And then most of the color guards, even with the red lights coming in, you could see some green lights. That's how much the market's been bouncing around the last while. Pretty wide swings. All right. But overall in Canada, you can see, especially over the last 2 days, things have been breaking down. We would have had three red lights across the color guard in Canada, except for the fact that we have that green light in there. So on Friday, there would have been three. You can see our MTI, unfortunately, has broken down below one. And obviously, our other three indicators are down day over day and week over week. So that puts us in the down situation. All right, short-term downtrend and an underlying downtrend. And as we look at our proprietary market timing signals, you can see the condition of all those. So we've been able to maintain the confirmed up call in the Canadian market since the 14th of November. So nice long running signal for us. Our DEW remains up. It turned up on the 2nd of July. The green light buyer, however, went to neutral on the 29th of July. And you can see our primary wave turned down yesterday on Friday's market action. All right, so overall, downward trending and a couple fairly big down days in the last 2 days after the Fed held U.S. interest rates. All right, so moving on to the U.S. next, you can see the U.S. color guard there. The U.S. year to date is up 5.93%, the VectorVest composite, that is. Right, and there you can see the U.S. Market timing gauge looking pretty much like Canada, 2 ticks into the red, and guidance reading the color guard is somewhat bearish. VectorVest does not advocate buying any stocks at this time. Okay, and you can see down below, we've also had the U.S. MTI go from, look at the move here, from 1.07 down to 0.91 just in the 1 day. All right, here you can see the wide swings in the BSR over the last period of time. But again, the US is in a down situation. And they got very close to losing their confirmed call, but it remains confirmed up for now in the US market. Both of our markets are very close to losing the confirmed call if we do have continued downward action next week. So keep an eye out for that. The Canadian market will be closed on Monday. So we'll be playing some catch up on Tuesday with however things play out on the US side. All right, so if we look at the roundup of the signals for the US market, you can see their confirmed call remains up. It just turned up on the 11th of July. Their DEW turned down on Friday. Green light buyer went to neutral on the 29th of July, and their primary wave turned down on Friday as well. So those last two fairly significant down days really taking the wind out of the sails a bit here. All right, let's look at what all of our countries have done. There's the May roundup. All right, so you can see what our markets did in May and what the year to date looked like in May for all the VectorVest countries there. And then we've got the roundup for June. You can see June wasn't quite as good a month as May. And July, you can see turned out to be a fairly decent month. You can see Canada and the US up over 4%. Australia was able to be up over 2%. The EU coming in last there, just eking out a gain at 0.37%. And then you can see the year-to-date numbers that we're looking at across the top. All right, so that's Canada, US. Now we're going to go across a couple of the big ponds, and we'll get into Australia first, the land down under. There you can see the Australian VectorVest composite up 6.3% year to date. And there's their market timing gauge. So they're one tick into the red. The color guard is mildly bearish. VectorVest does not advocate buying any stocks at this time. Okay, now for now, you can see the Australian market remaining in an up situation. So short-term uptrend and an underlying uptrend. Their MTI lost quite a bit of ground on Friday, but still hanging in there just above 1. But you can see the other indicators also losing quite a bit of ground in the BSR, the RT, and they are in a confirmed down situation. Let's take a look at their proprietary market timing signals. So they lost the confirmed call, switched to down on the 30th of July, so fairly recently. DEW remains up, has been up since the 11th of July. Green light buyer went into neutral position on the 1st of August, and the primary wave remains up, as we mentioned. All right, it turned up on the 31st of July. Moving next to the European Union, you can see the VectorVest composite in the European Union, just up 1.30%. So it looks like the end of July was a little rough on stocks over in Europe. All right, here's their color guard. You can see their market timing gauge needle is 3 ticks into the red, and they have guidance that reads the color guard is bearish. VectorVest does not advocate buying any stocks at this time. And here you can see their top row of lights, 3 red lights, confirmed. So an RT Kicker confirmed red light in their price column on Friday. And of note here, you can see the BSR below the 0.20 and below level in the European Union, where we'll usually start giving the warnings as far as this indicator is concerned, that the market may be searching for a bottom. All right, their MTI still at 0.83, so it hasn't got down to the 0.60 and below level, where we start giving that warning based on both of these indicators. All right, they are in a down situation. And if we run through the market timing signals there, you'll see confirmed calls down, so they turned down on the 24th of July. The DEW turned down on the 17th of July. Green light buyer went to neutral position on the 25th of July, and they lost their primary wave on Friday as well, the 2nd of August. All right, so that's a recap of the color guards across the VectorVest world. Next thing we'll do is we'll take a quick look at market timing graphs. So here you can see the Canadian market timing graph. And it wasn't that long ago. We actually had our July forum in the middle of July or close to the middle of July. And we were talking about how we were waiting for the market to break out of the channel that we were in here. So in the Canadian market and the US market, for that matter, we had just broken out when we had our forum in July. All right, you can see how quickly the Canadian market moved up. And then what ended up happening? Well, we ended up right back into a channel, right back into consolidation. And you could see we had some pretty good wide-ranging candles here. All right, so we ended up in that channel. Looks like we were breaking out on the Fed day here. And then you can see what happened on the days following, Thursday and Friday. We literally came right back into this channel on Thursday, and we just blew through this support level on Friday. Our wick is actually in the zone of our next support level. So when our market reopens on Tuesday, this level here is going to be critical. We'll have to see if we do have downward action, whether this support level is going to be able to hold. You can see the 65-day moving average right at that level now, and we do have this other level of support from our previous period of range-bound activity right down here. One of the things that I've noticed in the markets that actually use the 65-day moving average, you can see how critical and how key that 65-day moving average has been. You can see we came back, touched it back here, actually did close below it a few sessions there. Okay, and you can see where we came back with a touch here as well, and we're getting very close to another touch. All right, probably in the Canadian market, it's going to be price action staying above that 65-day moving average at this point. That may dictate whether we maintain our confirmed up call or not. All right, so that's Canada. I do have Canada as well with our proprietary market timing indicators. So here you can see, as we were breaking out of the channel here, right back in this period, we were getting very good lift in all of our indicators. Okay, our MTI was able to get back above 1. Unfortunately, our other indicators weren't. We got very close with RT. All right, but now you can see the sharp pullback in all of our indicators with the last 2 days price action. One thing that has been mentioned that we haven't covered a lot is, you could see some bearish divergence setting up here too. When the Canadian market did put in a new high right in this area here, you can see how the MTI was not able to put in a new high. It's not coming in and joining the party here. All right, and you can see the same thing with all 3 of our indicators there. All right, so that's the picture in Canada, folks. Let's move to the US next. So here's the market timing graph for the US, and you can see very similar picture. We had resistance right up here, right around the swing high from Fed day. All right, and you can see how, as I was mentioning, the US was able to break out of this channel too. They actually had this wider channel and then an inner channel going on right within this area. All right, they were able to break out, put in new highs basically canceled the probability then of this double top playing through. So that was nullified. But they too ended up a bit range bound. And then you can see again on Wednesday, pushed right up, challenged this high here again. But you can see sellers came in, really repelled that move by the end of the day. And then you can see what ended up happening Thursday and Friday. So just like in Canada, they ended up they actually gapped through support here. All right. And this wick might not be quite in the zone of their next level. Now, this level I drew in, this wasn't picked up by the software. So I think this level here is going to be key. The next key level, if the market does keep moving down in the US market, here's the other level that was picked up by the default settings for support and resistance in the US market, followed by another level down here. All right, but definitely when their market opens up on Monday, if we do continue moving to the downside, let's keep an eye on this level here first. All right, if they do move up, what was support here will now be resistance before we can take a run at challenging our previous swing highs and seeing a further resumption in uptrend if that was to play out. All right, so the same thing as Canada. I'll put on the US with the market timing indicators, and you can see the same thing we were talking about on the Canadian side, where price action was putting in a new high between these points. But look at the difference on our MTI here. All right, the MTI, the buy to sell ratio, and then RT. So definite bearish divergence has crept in here for sure. All right, and the same thing can be said, the US indicators, all of them were able to get above one. However, they are pulling sharply back with the last 2 days price action there as well. All right, so here's the European Union and European Union. This is Australia. Get the flag right. So Australia, when we last met, we're still struggling to get out of this range-bound area here. You can see they did end up pulling back, and look again, folks. Here's that 65-day moving average. Look at how key that's been. When Dr. D decided to use the 65-day moving average in the other markets, you can see exactly how brilliant that was. All right, you can see how it comes into play all the time here. And again, through this period here, how many times we've got touches in the zone of the 65-day moving average. All right, so the Australian market did pull back. Looks like it was going to break out. All right, you had the break candle here. Was looking like you were getting follow through here. Ended up having a closed green candle. So that was even on Thursday. And then you can see what ended up happening on Friday. So pulled right back into this zone that they had been in for quite a while, in between what was resistance and support here. All right, so in Australia, looks like that 65-day moving average is going to be key when their markets resume trading next week. If there is further downside action, is it going to be able to hold and continue acting as support? All right, then there is a support level down here, fairly nice one. All right, and then if we look at our proprietary indicators there, you can see the pullback. Doesn't look like, as far as the MTI is concerned, we got the bearish divergence we're seeing in Canada and the US. However, they did put in a new high, and it doesn't look like the MTI did. All right, so that's the Australian picture. And here's the European Union. So the European Union, just like Australia, when we last met, continued to be range bound. And you can see a different picture here. They didn't get a break above. They actually got a breakdown in market conditions there. and you can see actually touched support back in this area, tried to rally off of that. And then we've got our 2 down days, Thursday and Friday, and now Friday's action, you can see they've pretty much blown through this level of support. So again, with them next week, we'll be looking to see whether you get follow through and confirmation that this level hasn't held. All right, if that doesn't hold, default settings have picked up a level of support right down here, and another level here, another area where they were range bound for a while. All right, this will be a pretty good level here as well. All right, and then if we look at the graphical form of the indicators down below, you can see how all of their indicators have been below 1 for a period of time here and have all turned down more aggressively. Look at RT really pulling back here. All right, so that's the color guards, market timing graphs for all the VectorVest nations. Next thing we're going to take a look at, folks, is we're going to move into our monthly comparison of the performance of our global market tracking ETFs. All right, so we've got June on the left-hand side. So you can see how things were shaping out in June. As we mentioned, when we looked at our country performance, June wasn't the best month. So we have 43 ETFs. We had 10 winners, 33 losers. Overall, as a basket, they were down 2.24%. But you can see the ones that were leading the way. We had, rounding out the top 5, we had Taiwan up top, South Africa, the NASDAQ had been running in that period, South Korea, and India. So now moving into July, isn't it interesting to see? So, you know, the story in the US market was we had this rotation happening out of tech stocks and into, it looked like the Russell was the main benefactor. Little strange for me. I believe we're late cycle in this market cycle, so a little strange, I thought, to see a rotation that way. Now the Dow Jones did get part of that that party going as well. All right, but you can see for July, the Russell led the way, 10.34% gain. You still have, well, you have Greece near the top, 7.97, Malaysia at 5.52. There you have Europe at 5.17, and South Africa rounding out the top 5 there, over 5% as well. Perhaps we should give honorable mention there to Canada making that list. Definitely helped along by our commodity stocks for sure, which typically do very well in late cycle market conditions. All right, so that was just shy of a 5% gain for EWC. Overall, as a basket, 2.29% gain. So you can see the VectorVest composite outperforming that basket for sure at 4.74%. All right, in July, out of the 43, we had 35 winners, 8 losers. So quite a different picture, almost the opposite picture of what we saw in June. Sticking with the global market tracking ETFs, we've got our July, we just went through this. So we've got July performance on the left, and then we've got the year-to-date performance for this basket over on the right. So year-to-date, you can see out of the 43, we've got 32 winners, 11 losers. And interesting to see how this one's playing out. You can see Turkey leading the way. Turkey just has I can't remember what their interest rates are, but they've been fairly high for a sustained period of time. but they come in at the lead here, 25.90% year to date, followed by India at 15.26%. Peru coming in at third, 13.67%. Malaysia, 13.32%. And rounding out the top five, you can see Greece at 12.5%. The S&P in the list, all right, the S&P 500, the NASDAQ in the list there as well. All right, with decent gains year to date. Okay, so the next thing we're going to take a look at is we'll go from the global market tracking ETFs to the market sector ETFs. So both the global market ETFs and the market sector ETFs are in the US software, folks. So they're only in the US software. And here you can see if you're looking for either of those, you can go to the watch list viewer. They'll be in the cherry picking folder. All right, so we've got the market sector ETFs year to date for 2024. And you can see, what do we have? 30 of those, 21 winners, 9 losers. And here you can see SMH leading the way, almost 25%. GDX for gold in the US, up over 17.5%. XLU, up over 17%, XLC over 16.5%, and rounding out the top five, then we have XHB at 16.33%. All right, so as a basket, up 4.52. The VectorVest composite is outperforming that basket, up 5.93% over that time. If we look for recent movers, we use the Unisearch, looking at these sector ETFs and doing a 10-day delta on them. You can see we've got XLU, so they were in the list over there. XLU, the top return over the last 10 days at 5.83%. Then you can see the iShares, so that's going to be Dow Jones real estate, I believe, 2.91%. We've got XLV, just over 2%. And then you've got Invesco, food and beverage, 1.85%. Rounding out the top five, we've got a spotter, consumer staples, XLP, up 1.5%. All right, so that's a quick roundup on both the global market and the market sector ETFs. That takes us into the essays, folks. So another excellent week of essays around the VectorVest world here. So we've got the recap of them here. I'll run through this for you. So if you haven't had a chance to check out some of these and see something of interest to you, you'll be able to go in to that country's software, log in as you normally would, and go to viewers and find the essays in there, all right, for August 2nd. So out of the US, Angela Akers wrote an essay entitled Vital to Your Success. So how to use VectorVest Trading System Viewer to easily adopt a trading plan and benefit from the VectorVest Edge. Moving on to Canada, we've got Mr. Don Reitzma wrote an article or an essay entitled Nets, Conservative Bottom Fishing. All right, so this was a look at how to use a VectorVest moving average to find an earlier buy opportunity when there's a confirmed call down signal. So anybody, either using the nets or looking to use the nets and still looking for more information on it, you definitely might want to sign into the Canadian software. Don's last 3 essays, I think, have all been concentrated on the nets strategy. All right, so a lot of information on nets in there for those looking for more information or clarification of certain items. All right, if we move down to the European Union, you can see Susan Hayes Culleton wrote one entitled Quick Folio versus Portfolio. So they explain the difference between the VectorVest Quick Folio and Portfolio in that essay. And then once again, from the land down under, Australia, we've got Robert and Russell Markham. Their essay was entitled How Do the US AI Stocks Stack Up? So their previous essay was looking at Australian AI stocks, wondering if they measured up to the US stocks. So this week, they used VectorVest to show you how to analyze the top AI stocks in the US market. All right, so like I said, folks, another great round of essays. Hopefully everybody's able to get out and read all the essays of interest to them. A lot of excellent information in there for sure. So we have started August. Here's the August almanac. So historically, August has been an uncertain and difficult month for investors. I don't know, folks, if you remember when you were in school and you would have somebody come up to you and tell you they were going to give you so many rights, you'd be begging for a left. We'll see if August is going to have us begging for July again. So Hirsch and Mistel's 2024 Stock Market Almanac ranks August as the worst performing month for the Dow and second worst for the S&P and NASDAQ since 1988. So while the VectorVest composite over the last 28 years shows that the price of the VectorVest composite has gone up 14 times and down 14 times in August, so we've got an even split there. Not quite an even split for gain and loss. So the average gain has been 2.5%, the average loss 3.91%. All right, so remains to be seen how the rest of August is going to play out, but it definitely hasn't started on a positive foot for sure. Here's an earnings update, the latest earnings update from Angela on Friday. So according to FactSet, 75% of S&P 500 companies have reported their Q2 2024 results, with 78% beating their earnings estimates and 59% reporting revenues above estimates. So those numbers have definitely changed and definitely not as high as we've seen in other earnings cycles. All right, so you can read the rest of that there, but I'll just hit the highlight in the first sentence. Okay, so the earnings update out of the US. I want to make sure, I don't know if let me just see. I don't think I have it open, so I will open it. I want to make sure everybody is aware. I know this was very well received. I was seeing comments in, and not just the weekly market update, but in the investor community room in VectorVest. So VectorVest made all of the late great Dr. David Paul's essays available to all VectorVest subscribers. All right, so let me just I'll bring up the room here. Quickly and make sure folks know where they can go to get those essays if they haven't done so already. All of the VectorVest essays have so much gold in them, folks. There's so much great information. And of course, that's the same thing is said for those done by Dr. Paul. All right, so I'm going to bring the VectorVest community room in here. All right, and you'll see files here. Now your room's going to look different from mine. You won't have all of the buttons I have, but the important thing is to go to files here. And if you click on files, here you can highlight Dr. David Paul's essay, all put into a single PDF for everybody, and then download them there. All right, so hopefully if you haven't been able to find them yet, that'll help you get there. All right, yeah, I'm just looking at some comments, so definitely see some comments related to those essays there as well. All right, so that's that one, and as mentioned, available to all VectorVest subscribers. So here's a little note from, I believe Intel's earnings were on the first on Thursday. So folks, uh, not sure if this is a sign of things to become. If you remember back to last fall, the Nasdaq was struggling a bit, and definitely certain companies were struggling. The what kicked off a rally at that point was some of the tech companies coming out saying they were laying folks off. And then we saw another rally start. Meta definitely, their stock, once they announced that they were reducing jobs, their stock started moving up substantially. Oops, we hit the wrong button there. All right, so Intel announced with their earnings release that they're looking for $10 billion in cost reductions. All right, you'll see in the top there, you'll see they reported revenue of 12.8 billion in the second quarter, down 1% from the year prior, and an income loss of 1.6 billion. All right, so Intel wants to cut 10 billion by 2025, but look what they have at the bottom here, folks. This is huge, and we'll have to see if this is a sign of things to come. But typically, companies do not like to cut their dividend, let alone suspend their dividend. And here you see Intel will also suspend its dividend starting the fourth quarter of 2024, which means it has halted payments it was planning to give shareholders. The last I had seen, Intel was down over 24%. I think Todd told me this morning they finished down just over 26% in the session on Friday. All right, so something to pay attention to for sure. I'm not sure how many folks, you can let us know in the room, how many folks were in a stock like Intel, specifically for the dividend. They paid over a 2% dividend in the US market. But keep an eye on items like this as this earnings season does continue, and possibly looking into the next earnings season. All right, so wanted to make sure everybody was aware of that. Pretty key. Next thing we're going to do, I just want to make sure, folks, it is summer. So people go off on holidays. They might not, they might end up missing sessions. So the weekly market update has successfully moved from GoToWebinar to the VectorVest investor community. We had our first session there last Tuesday. So I know a lot of folks were looking for emails last week. So those emails that you were getting were GoToWebinar emails. Now we do have an email that will be coming out this week. So expect to see emails this week letting you know or reminding you about the weekly market update and letting you know where to go to find it. All right. But I had just shown you that community room before, and here I've got the VectorVest investor community room. You can see the weekly market update used to be under the coming soon, has now moved up to the schedule here. All right, so now you can see the daily color guard reports out of the US, weekly market update, and the US and Canadian timing the markets, all scheduled in the VectorVest investor community coaching room. All right, so want to make sure everybody's aware of that. And here we've got the links. So you've got this link here will take you to that community room, and then there's an easier link right below that that will also take you to that community room. The email that will be coming out also has that. The other thing I should point out, and I'll use it, I can use either Canada or the US. I'll bring Canada up here. And this was true for last week. So if you've got the home page of either Canada or the US up, you'll see the weekly market update for the 6th. It won't matter now if you click the register or the join button. Either one of those buttons will end up taking you to the community room where you can log in with the same username and password you used to log into VectorVest either 7 or the mobile app. All right, and that'll take you right to the weekly market update there. Okay, so I think with all of that said, that brings us to the keynote presentation. And as I mentioned, folks, an honor and a pleasure to be joined by Mr. Todd Shaffer. And not sure if Todd's going to be coming on there on the camera or not. We do have the delay. Oh, maybe going right to the slides. Oh, there he is.
Here I am.
You see those dark clouds in behind Todd. I think he specifically did that just because of what happened Thursday and Friday.
That's right. Red Dawn.
All
All right.
right.
Well, we'll see if we can get switched over to my presentation. I feel Keynote. I feel all of a sudden under pressure here. So not sure about that. So by the way, folks, in our presentation here, I'm going to ask you to help me build a watch list of stocks. So get a stock or two ready so we can add them to our watch list when I ask for them. Otherwise, they'll scroll up in the queue and I won't be able to find them again. But let's talk about when to sell. And I'm doing this from the context, and the reason I put it on the slide with the portfolio cleanup setup challenge, which is coming up next week, by the way. More on that in a minute. But as a coach for the Successful Investor Group, a lot of people are helped by having that specific frame of reference, which is very much a prudent frame of reference on which to build, right? So if you're more aggressive or you're a conservative buy and hold investor, right? Those are just variations of the theme. And so what we like to do is establish the principles, and then you can modify them or customize them to your own liking, your own temperament, your own investing objectives, that kind of thing. All right. So the bulk of my commentary here will be from that successful investor prudent perspective, but not exclusive. I want to keep this more freewheeling and more conversational, so we can talk about it. But in that challenge, which is essentially the portfolio challenge, is essentially the quick start course. This time we're going to do it live in a 4-hour session. So kind of a one and done binge watch, if you will. But in the quick start course, there are 5 modules. And while it's not intended, right? It's quick start, it's in the name, right? But it's not intended to be an all-encompassing how to invest presentation as much as it is, let me drag that over by the way, as it is a place to kind of ground ourselves from that perspective and shared perspective so things have context. All right, so let me start by saying, and I thought about, should I ask how many people are already familiar with the challenge, but I'm going to flip it around. Anybody in the room who's not familiar or is unfamiliar with the quick start course or the portfolio challenge? So there's a little delay here, so I'm going to let that develop in the chat room. But I'm just curious, out of this universe of people, how many are kind of new to the VectorVest system? I'm guessing the majority of us here are familiar, so that lets me go a little bit faster. But again, as long as you give me the latitude to not be all-inclusive and try to give the whole course in one 30-minute session, I'm good for that. All right, so Gary says, not aware, and Gary is the only responder, at least so far. I don't know how much delay there is, but hopefully Gary will get you on board here and get you part of into the VV Nation. I almost said the VV universe. I'm trying to expand our horizons here. All right. So remember, the goal of the challenge and the goal of the quick start course is to become a better trader and investor by taking a rules-based approach to your trading and managing your portfolio. All right, so a little mix. I got some more feedback in there. So yeah, I imagine there are some people who are very aware of the Quick Start course, and maybe you can provide some help to folks in the chat because I'm not going to be able to watch it very closely. So we'll give Ray a little break here too. All right, so the course is designed, let's start with just high level. What are the principles, right? Well, first of all, we need a system of stock analysis. So we have that VST system for helping us analyze the upside potential, the safety, and the current price trend of these stocks. The second module is our when to sell module. We call it weeding the portfolio because a lot of people coming to VectorVest for the first time have stocks that they may have been holding for decades, right? And they're underperforming and have been underperforming. They just never really had a methodology for weeding them out of the portfolio. And of course, there's the hidden cost of unrealized losses and the hidden cost of not being able to redeploy those assets in something that is working. So we're going to spend most of our time here on the weeding aspect or the when to sell aspect. But we also then talk about having a signal that indicates for you when is a good time to buy, because unlike the popular media and the investing industry, it's not always a good time to be buying stocks, right? And you're feeling that a little bit now as the market is kind of saying, well, wait a minute, a slowing economy, falling interest rates or inflation rates, and higher unemployment, that's starting to sound a lot like an economic slowdown. And when in an economic slowdown, sell everything comes real fast, right? So market becoming defensive as some of those macro numbers start getting pushed around. Then we talk about how to create a cherry picking checklist for the stocks that you want to enter if you have rising market conditions, or shorting if you're going to short the market in a falling market condition, and then how to put it together into a 10-minute plan. So that's kind of the challenge and the quick start course, to give you a holistic approach based on those prudent fundamentals. Okay, but we're going to focus on lesson 2, which is weeding your portfolio. And I thought I could expand the topic a little bit, not just teach the second module, because I want you to come to the session next week, right? But explore the lessons and the principles from that lesson and expand on them as a basis of your trading plan, right? Stuff that you can incorporate into what you're doing in your own particular investing. So weeding the garden is all about eliminating the poor performers from your portfolio, right? But it's a nice entree to talk about stops in general, because obviously the way you want to weed the garden, right, you're going to stop out of those underperformers. We're going to finally say, well, enough is enough. I'm drawing this line in the sand, and I'm not going to take any more hits. So when to sell is universally the hardest issue for most investors, right? I've been doing this for 16 years now, right? But even so, in the broader history of VectorVest, that is consistently one of the challenges that all investors face. So in the successful investor approach, we focus our efforts on using stop losses, right? So you can do other option trades, that kind of thing, right? Other hedges, but we focus our attention on stop loss criteria or methodologies. And we're doing a couple things. First of all, we're controlling our maximum risk, right? If you don't have a stop loss on your trade, you have accepted unlimited risk, right? And I was gonna say, maybe it's technical instead of practical, but ultimately you have no limit to the risk because you're saying I could go to zero and not take any action, right? So usually most people say, well, I would never let it go to zero. And so my follow-up question is, okay, how low would you let it go? Well, let's place a line in the sand, stop there, so it doesn't go past that level, right? So stop losses have a place. They don't have to be 1.5% away from the current price action, right? They can be very wide, but the time to place them and make those decisions is not when you're in the heat of the battle of the 6% market sell-off that happened in 2 days, and now you're in a panic, right? So we want to think about these things in advance. So we're going to define our maximum risk. We're also going to make adjustments with that stop loss to minimize the risks as the trade develops, and also ultimately to capture gains as soon as reasonably possible as that trade develops. And may all of your trades be gainers. Doesn't always happen though, does it? So we need to be able to have a dynamic model that can play both sides of the equation. So the other thing you need to think about, and this is where the variations, another place for variations to step in here, is your selected stop loss needs to complement your objectives for the trade and your time frame. Right? So if you're going to use a broad stop in the VectorVest system like the VectorVest sell rating, but your objective is to hold the trade for 2 or 3 days, then that's probably not a good match, right? Conversely, if you're a buy and hold investor, using a 3-day moving average is probably not helpful either, right? So we want to have match between those objectives. So in the successful investor world, we start with these 3 tips for when to sell. First, we look at the price's performance for its direction and stability. And direction really means trend. Is the stock hitting higher highs and higher lows? That would be our preferred method, right? Or is it hitting lower highs and lower lows? It's in downtrend. Or is it not doing either one, right? It's moving sideways. So if we're buying stocks that are rising in price, they're in uptrends, then the first thing we would see in the breakdown of that trend would be a failure to hit a higher high, or we put in a lower low. And if we confirm that with the second half, the lower high and the lower low, then you've seen a change in price direction, right? Change in trend. We also look at our relative timing indicator. When it falls below 1, that means that the stock from that analysis has fallen into downtrend. So it's less sensitive than that price direction move, price being the most sensitive. And in fact, if you think about price, there are people who are playing candlesticks intraday, right? So time frame matters again. Third, we look for the recommendation profile to turn to a sell. In other words, price has fallen below the VectorVest stop price. That's the prudent jump off point for the successful investor approach, right? So one thing I hope you noticed, right, as we go down the list, we're becoming less sensitive. Or conversely, if you go up the list, you're becoming more sensitive and more aggressive, right? So for purposes of this conversation, aggressive means I'm closer to price action, I'm faster to trigger, it's more sensitive to the adverse move. Also realize that each of these guys can be applied aggressively or conservatively. So even within the world of the VectorVest stop price, I can apply that methodology more or less aggressively. In other words, I could just use the VectorVest stop price as a kind of a charted moving average, look for a close below that mental stop, and then put in a sell order. I could use it as a hard stop where I actually put the value in as a stop loss with the brokerage. And if I even tag the line, I'll be out. I can also use what we call a ratchet. I'll show this here in just a second. A ratchet stop where I move the stop up with the VectorVest stop price, but never adjust it downward. Or the least sensitive would be let that stop loss line pulled back with the price action to keep me in the trade even longer. So let's take a look. I'm going to bounce off into the program here. And let's go to the viewers tab. And let's see, I think I have a watch list viewer. I do. And we're going to put our little stocks in our weeding exercise, but I pre-populated PGR so that I could have an example for us to play with here. So let's take a look at it. And PGR is a good successful investor kind of stock, right? It's going bottom left, upper right, smoother the better. Not a lot of volatility in the price action. It's driven by earnings. Performance is going bottom left, upper right. So very much a successful investor kind of stock, right? And one of the benefits of that performance is that particularly when the price breaks down, it's really easy to recognize. So I'm going to put the VectorVest stop price on top of that price action. And so the first thing we were just talking about was using the VectorVest stop price as my stop. I can apply it more or less aggressively, right? So starting off with just using it as a mental stop, what I'm looking for is, does price close below the VectorVest stop price? When that happens, the recommendation profile up. When that happens, you'll see a sell rating in the recommendation profile, right? Because price closed below the stop loss. All right, so I could use that as a mental stop where I'd place my line in the sand stop below that low of the triggering candle. Or a little more aggressive would be I had already populated that value with the brokerage and I got knocked out on the tag. Or if I use a horizontal line, we have a thing called a ratcheting stop where I raise my line in the sand stop with my broker as the stop price goes up. But if it pulls back, then I don't make an adjustment until it keeps going higher. So I'm ratcheting higher as the VectorVest stop price keeps making new highs. So that moves along until finally I got to the point where I got to this value, and on an intraday basis, I tagged out because that's a hard stop with the brokers. Makes sense? So there's a bunch of iterations that you could do, but the point here is whatever stop loss vehicle you choose, how you apply it, there's some latitude, right, on how aggressive you do or don't want to be. Again, the key is at all of these decision points, you're making a decision that based on your analysis puts the probabilities of a successful trade on your side. That's the key. Think of it in probabilities. Which method is going to work over 50 trades, not which one is going to optimize this trade. Right? That's a key difference. Now let's talk about the stop loss vehicle itself. Right, because here I have the VectorVest stop price, very smart indicator, right? It's based on a 13-week moving average of the price action. We make an adjustment for the fundamental strength of the company. It's supposed to be a wide stop, right? We're trying to give this stock room to breathe because it's been doing so well for so long. Using the VectorVest stop price, if I come back to my 1-year time frame, I've traded this stock once in the past year. If I put on a, let's try a 40-day moving average. If I used a 40-day moving average, see how embedded it is in the price, which means I would have traded this once, twice, thrice, 4 times to be generous, right? So I was in and out of this thing 4 times in the past year. Doesn't make it right or wrong. It means that you're holding, if your objective was to hold this on a swing trading basis, that might work fine. If your objective was to hold this as a position or investment, then the VectorVest stop price is your better solution. Maybe you're a short-term trader and you want to use the 20. And now you trade it once, twice, thrice, 4, 5, 6, 7, 8 times in the past year. They might have all been successful trades. But do you see how the stop loss vehicle has to match your objectives for the trade, what you're trying to achieve? The next idea I want to share with you is in the broader context of market conditions, right? The basic theorem is that when the broad market is rising, when the VectorVest composite is rising, it's all the 9,000 stocks in our database. When it's going up, the majority of stocks, by definition, are going up too. That's the best time to be buying stocks. Well, what about when it rolls over and starts going down? Well, then by definition, more stocks are coming under pressure, right? Not necessarily that they're in downtrend, but their uptrends are certainly weakening, and some are falling because the VectorVest composite is falling. So in Successful Investor, when we get a confirmed down call, let's pretend for whatever reason, I got a confirmed down call while my stock was taking off like a bird. Well, I've got some great profit built up in this trade, but I also have a big exposure between the current price and the VectorVest stop price. Put a date line on there so I get the real price here. Right, current price at 210, the stop price is down at 187. Right, so to minimize that, we have what I call a multi-factored approach. When I get a confirmed down call, for instance, then that tells me that the trend has changed and I can become defensive and apply a tighter stop. So you'll hear us refer to this as tightening stops. Now you can or you can't, right? If I had that situation here and I didn't tighten stops, I held through that pullback and we're off to the races. Great. But if the market does break down, maybe I want to tighten my stops to that 20-day moving average. So if I do get a significant pullback, I'll close out the position, I'll ride out the pullback in cash, and then I can always re-enter when the coast is clear, when I start getting green lights in the market timing system again, and my stock resumes its uptrend. All right, so that's kind of the overview of the approach. And again, the key here is that all of this is going to be rules-based, a rule set that you derive, maybe with our guidance, but you can nuance it, customize it to your own liking anytime. All right, so let me close PGR here without closing my whole screen. And let's see if you have some stock symbols for me. Go ahead and start typing them in. I'll try to drag my feet here with the 8 or 9 second delay. Let's see if we can get back going. I do have a fail safe here. I'll just grab VST stocks if I need to, but let's get going. So Jack is in with NVIDIA. Right? That shouldn't surprise us much, right? EXLS. Yeah, make them all in the US markets, if you would. Thanks for that, Badger. CAT, XBI, CNQ, Meta, ADMA, PX, ACGL. I got NVIDIA already for you, Robert. Michael V, SQRV. Oh, gotta be able to type it though. SQRV. Touch typing has failed me apparently. SQRV. So, try me again because somehow one of us is typoing. PYPL, and give me the symbol, not the name, if you would. I'm dyslexic enough. BAMSOLV. See, there's the dyslexia again. Amazon, KMB. Boy, if I stay here long enough, we could get them all. All 9,000, that is. David, I'm not sure what sounds is. SOLV is already in the list. ELVA, CLS, I think was already in the list. No, it wasn't. See, there you go. Sir Isaac, SOUN. Thanks for that, David. SMCI, GLD, TPC. Now, I will say, Erwin, with commodities, we can still apply the stop losses. That's fine. But commodities have special considerations relative to stocks because they are often a contracyclical, right? So more on that if you go deeper in the coursework. I don't want to get too far off onto side conversations, right? But let's let's wrap it up here and see if we can't move on. ROI-SEY, ROI-CELI, SU, PSIX. Again, Dale, with the Qs, we can put our stop losses on it, right? So Microsoft, XLM, TTS, QRVO. Phew, you guys are long-winded today. So 36 stocks in the database or in our watch list. Now I'm going to push this little screen off to the side. Notice anytime you're in the system, right, we sorted that list by VST descending. So that brings to the top of the list the stocks that have the strongest value, safety, and timing or price trend in combination. All right, so on balance, NVIDIA, even though it's in downtrend, I know that because RT is below 1, it's still at the top of this list because it has the highest VST score. So on balance, great upside potential, 54% earnings growth rate, positive earnings already, yielding 2.6%. Right. Very safe stock, 1.4 is excellent on that scale. So, as we're looking at these, if we were looking at these as candidates to buy, VST gives us the balanced approach. RV says these are the stocks with the best upside potential. RS, these are the stocks that have the most consistent financial performance. Here are the stocks that are in the strongest uptrends, right? So we can kind of customize the sort order to match our temperament as investors. Once these are in our portfolio, however, and particularly in the context of our little weeding exercise, what we really want to do is pretend these guys are in the portfolio and we're going to sort by RT. So now we're not looking at the fundamentals of the stock. And by the way, when you have ETFs, we are neutral on the fundamentals for those. We just score them at 1. But I'm going to guess, so you have solved is no longer in growth phase, right? So RV is sub 1, but not by very much. It's also not terribly consistent in its financial performance, right? A low score of 0.62 here on safety. So this might be more of it's not speculative because 0.94 is pretty strong, right? But it's certainly not in growth phase. And I'm going to expect there to be a little bit more volatility in its performance. I'm down here looking for sound, right? 0.43, 0.24 in a downtrend. So this fundamentally a weaker stock. So more speculative play. Well, that's great if that's what if you're there for that reason. But if you thought you were investing in something, then that analysis is telling me you need to take another look. All right. So in the weed the garden exercise, then we focus at the bottom of the list, the stocks that have RT scores below 1, they're in downtrend. Everybody else is above 1, meaning they're in uptrend. Now, they may be in pullbacks, but more broadly speaking, by the RT analysis, they're still in uptrend. Some weaker than others, granted, but we turned the corner. So in other words, Berkshire here is at 0.96, has turned the corner, but it's not like it's cratering. Cratering is closer to the bottom of the list down here with an RT score of 0.42. Make sense? So let's take a look at, and I'm going to focus particularly at the bottom of the list, right? And see if we can't find some examples. I'm just going to graph selected and bring them up. All right. So what we're going to do is take some of those selling tips, right, and apply them to these charts and see if we could have seen the turn coming and how we might have improved the trade. All right, so let's go back into the watch list, into the charts. And we can see if we looked at that 1-year time frame again, right? Price was in a nice little uptrend here. Let's get rid of our 20-day moving average. Price was in a nice uptrend, hitting higher highs and higher lows. Puts in its 52-week high here at the beginning of July. What happened? Well, it put in a higher low and then a lower high, lower low. So now we're officially in downtrend. We took out this prior swing low, right? And we've been moving lower ever since. We finally did pick up our sell rating somewhere in this time frame, right? So what happened? Price action broke down. RT fell below 1. We finally got a sell rating in the VectorVest system. So the question is, gee whiz, how sensitive do you want to be to the pullback? Because there were other times when the uptrend stalled, maybe even had a little pullback that went to successive highs. So we're going to give this thing some room to breathe, but how much room? Well, that needs to be, again, consistent with your objectives for the trade. But you had some clues, right? Price pattern changed, RT fell below 1, you got a sell rating in the VectorVest system. So maybe you want to use different moving averages. Maybe you want to use a stochastic oscillator or a MACD, right? Okay, that's all fine, right? Your question is, when you see that signal weakening, right, that's your opportunity to become more defensive, get a little bit more attentive. When you get the signal, it's time to go, right? Whatever signal you're using, when you get the signal, it's time to go. Now, let's come up with a fictitious time that we bought. Let's say that we got through the luck of the draw. We were able to buy this stock right at the high, right? Have you ever done that? Well, of course you have, right? We all have. So there's where I bought. Here was the value of the VectorVest stop price the day I bought it. Now the stock's already been in a little sideways move here, right? If I size the position so that if the price pulls back to that level, if the price falls from, I gotta be able to read that number, that's 65.38, and it falls down to 58, size the position so that if that happens and I close that position, I will lose no more than 1 to 2% of the portfolio value on the trade. Right? So, sorry, misclicked. Right? So this becomes my line in the sand because I just took the position. As the trade develops, it pulled back. Ooh, I stopped out here. Let's bring it all the way. Right. So yes, I took a loss on this trade, but I didn't let it get out of hand. I'm not down now 10% on that one trade, portfolio value, hoping for it to come back. Right. What happens to us is those big losers, and most of us experience, somewhere around half a dozen of them in a year, 3, 4, 5, 6. Those knock us back on our heels so much that we have to do 4 or 5 trades to overcome that one loss. So how do you avoid that? Don't have the one big loss. Set a line in the sand, define the maximum risk in the trade. If it pulled back to there, then it obviously is not doing what you thought it was doing. Something has changed. I don't care what changed. I want out, please, because it's not working out. Make sense? So using that methodology, whatever stop loss vehicles you use, as we start looking at some of these other trades, take off some of these lines. We have a lot of stocks that ran up into the high, they pulled back, and there's two things going on, right? There's where is your cost basis, and then what is the rest of the market seeing, right? I have a little canned phrase I like to say, the market doesn't know when you bought it, nor do they care. The market is playing the chart, right? So if your cost basis is way over here, right, if that's your cost basis, then you've given back more than half of the gain into the high. Is that okay? Well, if you're a buy and hold investor, then yeah, it probably is okay. Right? You're just trying to defend your initial position from outsized loss. But for most of us, there's an aspect of saying, well, yeah, okay, I gave back half of that, but in terms of dollars, how many shares did I own when this stock fell from 280 or from $200 down to $180, right? How many shares did I own? And what's that loss represent to the portfolio? The drawdown, right? The pullback in the value of the equity curve of the portfolio is untenable. So that brings us into that idea of being able to tighten stops and or capture gains. So one of the things that we do is once we have a gain of over 10%, we use a 10% threshold. Many people in our group use a 15% threshold because I'm going to try to protect half of that gain. And 5% is admittedly relatively tight, but that's what we've been teaching for years. Again, the concept is I want to capture these gains as much as reasonably possible. Right? I recognize I'm going to give some back because ultimately we like to let our winners run. But I don't want to give back an excess amount. And I know excess is a subjective term. So you need to come up with an objective reality of what that means to you. And then you can incorporate that into your trading plan. All right. So as we scroll through some of these, right? Amazon gaps down on their earnings report, right? Falls below the VectorVest stop price, but you could see it coming, right? Price comes up, comes back down to test the prior swing low, lower high. There's the breakdown. CLS starts to channel, right? We're coming into the high, higher low, lower high, higher low. So now I'm consolidating that sideways. I break out to the higher high, pull back to still a higher low, lower high, break down further. So RT crosses below 1, cross below the VectorVest stop price. What I'm trying to get you to see here is, yes, you can get catastrophic moves where things gap hard against you. But if you have the plan in place before, right? So here's a parabolic move on SMCI, right? With a big sell-off. Well, if I have in place, right? If I got in here, choose a freehand line. If I got into position here and rode it all the way up to that high, then I don't want to give, right? That's a big risk exposure. We try to protect half of that. So I would put a stop loss somewhere in that vicinity. I got tagged out. Okay. Because when that was on the hard right edge, I don't know what's coming tomorrow. Right now, I'm going, holy smokes. Right? I've given back half of that move. Let me get to the sidelines, let this kind of recover, and I can always go back in. Particularly, right, when you get into weakening market conditions. Again, I want to emphasize that the way you answer these questions are going to be colored by your sensitivity to risk, not only loss, but reward. You know, how much, have you ever been in a trade where you've made so much money that you start getting nervous and you look for reasons to sell it? Well, it's just the mirror image of the same problem, right? And the way we get rid of anxiety or work through anxiety is by having a rules-based system so we can lean on the rules instead of responding to our gut impulses. All right, so the methodology, to just kind of put it into context, is when you take the trade, employ a stop loss at whatever the risk threshold is for, right? If I'm using the VectorVest stop price and I'm buying here, then actually, this is a good example. Oops. This stock has been in consolidation, right, for what, 8 months? I'm going to zoom in here just on the on the last piece. If I can stop drawing lines, I'll zoom in. If I was using the VectorVest stop price, I'm buying the stock after the breakout. The VectorVest stop price is not that far away from the current price. Closing price was 423. The stop price is at 319. Right? If I looked at the height of that candlestick, that is a day, right? The next bar. If the next bar moves against me, I'm going to get stopped out right away. So I want a little bit more room to breathe. So when we're getting stocks that maybe have just had a pullback and they're coming up off the bounce and the VectorVest stop price is too low, instead of resizing the position to only buy 2 shares, right, I can put my stop loss down at something more reasonable for the prior price action and then resize the position based on that. I'm going to make the adjustment as the trade moves forward. The VectorVest stop price becomes my mental stop, right? So if I get a close below the VectorVest stop price, I'll make an adjustment to my line in the sand stop. As I start building profit, if I build more than 10% gain in that position, then I'll start protecting that gain. So as I go higher and higher on a daily basis, I'll adjust, and this red line would be my don't give back half line in the sand stop. As I build profit in the trade, then my line in the sand stop ultimately would have come up to here. I would have been tagged out on that day. Helps me capture the gain, but still give this thing an opportunity to keep running. I get to volatility-driven events like earnings. Well, with breathing room, I can try to hold through the earnings event where I'm expecting volatility and let the stock recover and move on to the higher high. All right, so those are some ideas on using stop prices. Let's go back, and I want to try to quickly breeze through some of these charts just to give us some ideas of where we can use stop losses on some of these trades, right? So obviously I don't know when you bought it. I don't know your objective, right? But there is something to be gained here. So Fair Isaac, right now, would you be in a panic to sell? If you are, I'd say, well, why? That stock's still in uptrend, right? Although technically double top here, I did put in the lower low. It's struggling, right? But still, RT is well above 1. Price action is still struggling. Let's call that sideways movement here, and I'm above the stop price. I don't need to panic here. I do have a confirmed down call though, so maybe instead of using the VectorVest stop price, I'll change over to the 20-day. Oh, look. Now this is interesting. I had a close below the stop price. Actually, I don't have a confirmed down call yet, so I haven't made this adjustment, but I'm going to pretend. If I get a close below the 20-day moving average, then I'll move my line in the sand stop up, right? And we have our own special rules for how to do that. But the key is when you're using this as a mental stop, that's the less aggressive approach. If you want to put it in as a hard stop, then you get tagged out. Makes sense? Using it as a hard stop, if you're already below it, kind of becomes difficult, but let's keep going. So in other words, if the market continues to break down here, I might tighten my stop from the VectorVest stop price. EXLS, right, has been sideways for the majority of the past year. It had a nice little run up into the most recent high, strong pullback, still above the VectorVest stop price. Set a threshold if the market continues to weaken below the low, because you're below that 20-day moving average. You're just retesting for Cintas here, right? So a little consolidation, you're moving sideways, a nice little support level there. Plenty of room to breathe using the VectorVest stop price. If you're tightening stops, then I'm still okay. I don't need to tighten anything yet because I'm still operating above the 20. Look at the volatility in those candles, right? So remember, we're talking not only about price pattern, but also earnings, or volatility. So I've got a volatility expansion here going on in that price action, makes it really difficult if you're just going to play the hard stop. But because the volatility is represented in the candle, moving my stop loss up below the expanded candle is still valid because the average range on a daily basis has expanded. Notice how when the stock starts moving sideways, the 20-day is starting to get buried in the price action, right? It becomes less valuable as a tool. That's why we favor buying stocks that are in uptrend, because when they're in uptrend, and XBI is not going to help me, see if I can find one. When they're in an uptrend that starts to consolidate, I can see the difference. Makes sense. So the stock still has room to breathe. It's in consolidation. So instead of using the 20, I might come down to the price action itself. But consolidation is not downtrend, right? All I'm doing is tightening stops because the market is looking like a wiggle. So PX was in downtrend. You've been suffering that downtrend for 9 months. I finally got a little relief rally. Oh, good. I'm going to hold on to this one. They do have positive earnings, so they're making money. That's good news. But again, we're not going to make that decision. We're not going to change our stops based on the fundamental analysis. I was just checking. Ultimately, VectorVest stop price is in place. I've closed below the 20. Market continues to soften. I'm going to tighten up my stop or establish one if you don't have it. Same thing for Rolls-Royce. Right. So hopefully that's starting to pop to you, right? How the VectorVest stop price has done a beautiful job managing these trades while the market was rising. Do I want to ride it out? Or do I want to get defensive because the market is starting to look weak? Arch Capital puts in the double top, pulls back to the lower low. So I'm in downtrend. I'm oscillating around the moving average. I'm still above the stop price. RT is still just above 1. So the price just below this low last pivot might be a good place to start thinking about selling. PayPal has been sideways for a year, right? This thing is in a big old channel. So you might think, well, if that's the normal price range for the stock, if that's the channel, then maybe I'll let this thing bounce around within that channel. And if it breaks here, that's the abnormal price move, right? Because it's been doing this for a year. Remember, the stops are here to help us identify abnormal. Now, GLD, we do have our gold bugs timer, of course, because again, this is really a currency. So we treat it, commodities, as potential contracyclicals. So it kind of has its own timing, but I'd still play the chart. Yes, it's more volatile, bigger swings, but so far I'm still in uptrend. We'll see if this pivot actually pulls back and I have the lower high, which looks like it's developing right now. So uptrend under pressure, let's say that. But let's let the pattern develop here. This is a situation where you have lots of room to the VectorVest stop price. That 20 might be too tight because it's embedded in the prior price swings. But you see how there's a structure here and we're just pushing that structure. All right, let me just pop through here because we're running out of time. Lots of sideways movements, right? And it's not uncommon to see a lot of stocks that have strong pullbacks now. If we get to market weakness here, what do you want to do about tightening stops? Time now to make that decision. Of course, you can hedge too, but that's the idea. So this stock never was an uptrend, right? So this is a case of, this thing was just added to the database in April. So not a lot of history here. And we like stocks with a little more history. So this is more of speculation just because of the new issue. But again, I am operating above the VectorVest stop price. RT poked its head above one, but I'm looking now to close that position if that trend breaks down. Nice channel for Meta. Somebody put that on there already for me. But I can apply those same rules, whether it's an index or an ETF, right? All these guys, all these issues have price patterns. And I can play those price patterns looking for the trends. The biggest thing that people struggle with is they'll take a price pattern like QRVO, and we're trained to buy the dip, right? And so you start entering into this sideways thing, and it is nothing but a nightmare for you trying to figure out what is going on with price trend because there is no price trend. And then it's really hard to identify abnormal behavior. All right, so let me bail out of that because I'm going a little bit over. Rick is probably yelling at me in the background. But just to recap, clarify your trade objectives and the time frames that you're trading on your stocks. Choose a stop loss vehicle that identifies abnormal for your time frame. Use your stop loss to define the max risk. So when you take the trade, use your stop loss to set your initial line in the sand stop with your broker. And yes, we say put that order in with the broker so that if you're unattentive or you, for whatever reason, don't see the breakdown, it gets you out. Use your stop loss to minimize risk and lock in gains as soon as reasonably possible. And the reasonably there is there because it's subjective to a degree. Right? The key is let's not watch our winners turn into losers, and let's not let our losers make a catastrophic loss to the portfolio as we're hoping and praying for it to come on back. So in closing, we're doing that and more in the cleanup setup challenge. So I invite you again. It's August 7th, 4 hours. We are recording it. So if you register for the event, but you can't get there, you'll get a recording of it. So VectorVest.com/PC if you're interested in doing that. But with that, let me pass it back to Rick to wrap us up. Unless, of course, Rick, you don't want to wrap it up, but I'm guessing you do.
Yeah. Thanks, Todd. Thanks again for that excellent presentation. I'm getting my screen share set up again here. Yeah, thanks. Lots of great comments in there. Folks liking that presentation. Todd, lots of valuable information there. So thanks again for that. One
Yeah, I
thing
should
I
add,
wanted
Rick, that if you're a member, come and you have questions that we weren't able to answer, come into the coaching rooms. They're live. We're there 24/7, right? So if it's a successful investor trade, then you can come into the room for that, or just come into the general room and BV Nation will help you out if you don't understand the system or why things are the way they are. We want to help. That's why we're here.
Yeah, and you brought up the coaching room there too, Todd. I just want to make sure because there was a question on weekly market update replay email, so I'll try to get an answer on that, whether those will come out. But one of the reasons why, or one of the benefits of going to the coaching room, is that we can get the replays for anything that we're doing in these coaching rooms literally within about 5 minutes of their finish. So I'll just show that here quickly before we end up closing out.
That is nice. It's also nice that we're not waiting for the data to finalize. So you're getting our feedback, our guidance right at the bell, actually.
Yeah, very true. So you can see in the upper left, you have what's been called the hamburger button. So if you click on that and then click on archives, you'll see you have recordings here. So if we click on that, that opens up a new tab with recordings. You can see the Canadian weekly market update there. US, the color guard reports. And here you can see the recording for the last weekly market update on the 30th of July. All right, and then of course, the other place to find the weekly market update recording link, and it does still go in there, is if you go into the views in either Canada or the US, and you go to Tuesday. So typically, if the weekly market update is held on a Tuesday, like last Tuesday, the 30th of July, click on that date there, open the views, and then scroll down to the strategy section, and you'll find right here, click here to view a recording of the weekly market updates. You can find the link there, but I will get an answer as to whether there will be emails going out for that. All right, so let me get back to the slides here. And yes, that brings us to thank you, folks. Thank you very much for coming out and sharing part of your weekend with us. It's always great to be able to put on the forum for all of the VectorVest subscribers, wherever they happen to be across the VectorVest world. And of course, there's non-subscribers tuning in as well. All right, so we'd like to say thank you to everybody coming out, and you're welcome to everybody putting thanks in there. Thanks again to Todd for that great presentation. And also, thanks to Clay for making things run so smoothly, filling in for Joey, and Ray in the background handling any questions that come up. So folks, as usual, if you have any issues, need help with anything, don't hesitate to reach out to our product support and training folks at 1-888-658-7638. All right, and then you have emails down below. You have support email, support@vectorvest.com. If you have any ideas for upcoming international forum sessions, we've got Ray's email address at the bottom, rayc@vectorvest.com. All right, and as mentioned, replay for the recording of this will be available immediately after the webinar. So folks, have a good rest of your weekend. Have a good rest of the summer. The next time we see you will be after Labor Day in September. Summer comes quick and ends quick. So have a good rest of your summer. Take care, folks.